This is David Stevens with Finwell Builders. Today is Monday, July 4th, 2022, and this is our weekly prep. We got an exciting week coming up here. It is a shorter week with the market being closed today on Monday for the US. So just keep that in mind as we get into the market and take a look at what's going on and get our preparations all set here. So we'll review last week and then we'll get into kind of what we see for numbers this week. And hopefully that'll help us to prepare. So let's get right into it. Looking at last week, so Dow Jones closed down up on Friday at 1.05%, NASDAQ up 0.9%, and S&P 500 up 1.06%. So money flow right back in, but semiconductors really got nailed. Is that a leading indicator for the rest of the market? Hard to say, but boy, did they get hit hard. So we're going to keep that in mind as we go into our prep here this week. And Google also and Meta also got hit a little bit. Look at our scanner. We didn't trade anything off the scanner on Friday. You see here pretty much low numbers there in the small caps. So let's go ahead and take a look at what's coming up here. So Tuesday, we have factory orders. Not a whole lot there. Wednesday, PMI numbers could possibly have an impact, job openings possibly, but FOMC minutes, 2 o'clock Eastern time, that could possibly swing us a little bit. It's going to be towards the end of the day, so just be prepared for possible swings right at the end of the day if there's anything substantial coming out of those minutes. On Thursday, Friday, probably our biggest days just because we get initial jobless claims. So that can swing the market a little bit, and that's pre-market. As well as on Friday, you got non-farm payrolls and unemployment rates. So those few areas maybe swing the market a little bit for us as we close out this week coming up. So just keep that in mind here. Looking at our calls and puts, people who are shorting the market are puts, and those who are going long on the market on weekly options are in the green here. You see weekly options there looking, huge buy here. Really, it's just hovered around that 412. So obviously some people are really expecting the market to rally up towards that 412 area to cash in on those calls. If you look at the put though, our ratio is your 1.77 puts per every call. And so you can see here, really, it gets really heavier, this 370 level on the SPY. So you can see there's a lot of people loading up, expecting the market to come down more than there is people that expect the market to go up. So you see this huge gap here between this 412 and 370. That's a huge range. And so the market, if they want to create the most pain, if the market wants to collect this money rather than paying it out, they're going to try to keep that market around 382. So that's kind of more towards this area right here. So just a little bit above where we're at, but it's not going to want to swing high and it's not going to want to swing low. So we'll see how the market does as far as hold on to their money versus giving it out to those who are buying those contracts. So just keep that in mind here as we go in to this week. Looking at the S&P 500, the E-minis, the live right now, this is the 4-hour chart. See here, right now we're sandwiched between the 20-day moving average and the 50-day moving average on this 4-hour chart. So we're just kind of stuck right in the middle. So that means, there's got to be a decision here at some point to break out. So we're either going to break above that 50-day or break below the 20-day. And so we're going to have to watch, as we come into the pre-market, see what direction are we. If it's starting to break down, maybe we have a down day here. If it breaks up, maybe we can break out above some of this resistance areas. I'm really looking at 383 really to be kind of the real breakout area for me. So just keep that in mind. If we break below this 20, very well could obviously come back down to these lows around 374. And looking at the weekly, here's another clue into the S&P 500. And this is kind of what I'm looking at. So on the weekly, you can see that last week we broke down this breakup candle. So we came up and now we're chasing right back down again. You can see how these candles are just kind of right next to each other, kind of similar to what we did here. So right now we are sitting below last week's candle. So the question is, do we chase this all the way back down to this support line here? And you see the 200-day moving average, 200 weekly average line numbers right here. So, do we chase down here? It's possible right now. It's showing more negative than it is positive, at least on this chart, on a weekly chart for the S&P 500 E-mini. So something to keep in mind, that we could possibly chase this down. We got to break really back above into this weekly candle if we want to start to rally up here. But right now, more weak. It looks weak on the weekly chart than it does positive. Looking at Google, 1-day chart, close to the top of the candle, really a tight range candle. So that's more bullish, but we are below this candle too. So really the market's kind of stuck us in the middle of a decision-making process of whether it's going to rally or pull back. So we might need at least, Tuesday to see what's going on. So if you're quite unsure as far as how you want to trade, whether you're going to go bullish or bearish on the market this week, just maybe give it a day, possibly, and see if we can get some information on which way it's going. Or if we see the market starting to break out, and it's definitely a break out or a breakdown, then we can obviously just jump in those trades and be ready. But just need to see that open to kind of see where we're going. And we'll post numbers in our Discord early so that everybody has those numbers going into the market just before it opens. Amazon, same thing, close to the top, but under the 20-day moving average. So we're at the top of the candle. That's good. So we may be able to chase up the rest of this candle here and get above that 20-day moving average. So right now it's looking more bullish this week than bearish, but we do need to get above that 20-day really to break that resistance area. Apple, same thing, looking very, looking more, at the top of the candle, right underneath the 20-day. Really got to break that 20-day. If we can break above the 20-day, at 139.46, we can possibly rally back up here towards 143, 144. NVIDIA on the daily chart. You see here we closed down towards the bottom and a new low. So semiconductors, like I said, just really got hammered. And so on a daily chart, we're in new lows, unknown territory. We're below all the moving averages. So, and here's the bottom of our, deviation bands down here, towards 116. So, where do we go? Where are we going to go with NVIDIA, or the possibility? What's next if we're in no man's land on a daily chart? Well, that's kind of where you go to a monthly chart. If you look at the monthly chart here, you can see that we're all the way back through all of our deviation bands here, right down to the 200 weekly average. So on a weekly chart again, you can see right here, we're on the 200-day. We've got to bounce here. If not, we have a lot further down to go. And just to give you an idea, I'll just take you over to monthly and show you. So NVIDIA, if we do not hold this area by, and we break below this 142 and hold, we have the 50-day on the monthly chart right at 139. Below that, $94 to the 100-day, and on a monthly chart, the 200 days at $57. So, we should be, you can see this is where we broke out before. We should be able to get support here and break out. If not, semiconductor is really weak. And if it's an indicator, a leading indicator to the market, then we have some huge downside coming real quick. So that's the only thing that's making me a little cautious. Semiconductors is the only one who's kind of leading down. So just something to keep in mind right now. But we're right at support. If we get a bounce here, it could be huge too. This really could be really an ideal buying period if we're at the very bottom when it comes to NVIDIA. So definitely keeping a close eye on this, watching that price action, looking to see where we open up. That will hopefully give us a clue into knowing if we got good support here at that 200-day weekly moving average. On Meta, so you can see here, we bottomed out here, pulled back up towards the 20-day, got rejected off the 20-day, back down to this low again and bounced off of it on Friday. So that's good. It's good. We're at the top of the candle, at 160. As long as we stay above 160, we can hopefully break out above this trend line here and go back towards the 20-day moving average. But it was rejected here. We got rejection off the 50-day and the 20-day before. So still really weak. So just be careful out there. Tough one to go long on until we see some stability and closing a couple of days above that 20-day moving average. Tesla on 1 day. it's kind of really flat down here, just kind of consolidating. Tesla's just not finding some strength here to get going. It's really got to get above that 700 level again to start pushing up. We got rejected last time we got above that. So we got to get above and hold that a few days. We did 2 days before and then got rejected off of it. So we just got to keep an eye on that. Looking to get 700 to break up, or that 662 area to break back down towards 620. And Tesla, till it moves somewhere, we could just be flat and consolidating here. I definitely, if you've not joined our Discord, go to finwealthlive.com right now and get on our Discord. There's a link out there to join our free Discord. We post our numbers pre-market as far as, whether we're bearish or bullish and what numbers to get in and what to get out. So definitely take advantage of that free service to get part of our community, and let's make some money together. So just get in there, and also there's some trading out there as well that's helpful. Looking at the dollar still remains elevated up here, still under resistance under this 105 that the highs that it put in. So just we're going to probably consolidate here until we make a breakout above that's 105.20 area. And we could get stuck in this range too. We kind of were there before, kind of been here for the last few weeks. So dollar just kind of hovering in that same area. Gold kind of flattened out here on this little support level we had before, but still weak, still downward trend on gold. U.S. oil. So U.S. oil is still under that 50-day moving average the last couple of days. We dropped down here, found support, bounced up, got above the 20-day, got rejected off of it again, and back down below it, below the 50-day. So if we get above the 50-day, we start to rally back up. So we got to get above the 82 area and hold it for a few days. If not, we could possibly break it back down in the support area around 78. The VIX, so this is the key to watch this. So, we've been in this wedge here, and as it's spiked up, the markets come down. As it's pulled down, we've had a little bit of a relief rally. And so you can see we just kind of go bouncing back and forth, and it's getting tighter and tighter. So right now we're at the bottom, right here at the 50-day, we found support there before and bounced off of it the last time. So now that we're coming back down to it again, question is it weak enough to break down and hopefully maybe bring us down, under that 25 area? If we do, we got a nice little rally this week, possibly lined up. And we could possibly pull up here and get a little bit of a relief rally. But if we don't, if we find support again here and get rejected off, bounce off this 50-day again, like we did last week, then we could have, more downside. But you can see we found support before, but that doesn't mean, we can't find some weakness here, because we have the 200-day moving average just popping right back up here, just below it now. So that's the only thing to keep in mind. We could definitely break it this week, which would be good for a nice rally. But if we bounce it again, pull back, and that means we're just staying in this little chop until we finally break up or break down. But right now, there's more downside, it looks like, for the VIX, which is good for the market right now. So we'll see tomorrow when we open. S&P 500, so SPY, 4-hour chart. Right at that 20-day moving average. So if we can hold above 381 tomorrow, looking to try to rally up to at least 387, 383, kind of where we were before, where we got rejected, and see if we can get above there. If we don't hold that, we start to break down, then look for support around 376, 373, or if we break that, then we could be coming much lower. So looking for some direction on the SPY on daily chart. You can see again, that support right here. This is kind of where it came from, this 380.54 area. So, hopefully we'll hold this. If not, we break down, we'll be coming back down to lower lows here. So something to watch. On the weekly chart, SPY, again, pulling down this breakdown candle last week. So we're kind of starting out kind of right in the middle of this candle. So do we pull down all the way back down towards the middle? Or can we start to push back up off this candle and start to rally up? Right now, closing at the bottom of the candle is not a good sign for a relief rally. But things can always change here depending on the news and how the market wants to play this week out. So just keep that in mind. The monthly chart, just to give you an idea again, SPY right here in the middle, right at the bottom of this candle. So we're in the candle. You can see just a little bit. So obviously we can start to rally up here on the monthly base. If we use the monthly chart as our line, we could definitely climb that chart here. If we break below this candle, last month's candle, that's where again we could start to go back here and find new lows. So definitely watching these candles to see which direction we're going to go. Triple Qs, top of the candle, above the last week's the doge here. So hopefully we can rally up here and reverse this tape a little bit here and get triple Qs going. But again, we're under the moving averages, so that's more bearish than bullish. So we got to get really up to 287.69 if we want to kind of rally up here. So here's semiconductors again, daily chart. At new lows, got to find support here. If we don't, then and we don't bounce off of here, then we got a lot of downside. And question is does that pull down the rest of the market too? So something to keep in mind. Again, weekly chart, 200-day moving average, 200 weekly average right here. So we got to bounce. Now or never. We're going to come down lower, and possibly a lot lower. IWM, top of the candle. So that's good. We're right in the middle of this candle. So looking to rally up here towards that 20 at 173.79 is kind of the goal. If we break below the candle, then back to lows. XLF financials, top of the candle. So this is what we like to see. So hopefully we can rally up here towards that 20-day, get above 32.25, rally up towards 33. But if we break back below the candle, then again, back to lows again. XLV, healthcare, we're right here. We got right above the, this, and trying to break above all these moving averages right at that 100. If we break the 100, then we have some clear skies here above, up to at least 133. So seeing if healthcare can hold this and break above this level. It's tried a few times, but we're back there again, giving it a good test here. So if not, we could possibly be range bound too between these little lines I have here, this 130 and this 127 area. We could range bound as well because we've been there for about a week. So keep that in mind as well. Energy sector. So you can see here, close at the top of this candle. So really, you can see here that we're more bullish than bearish. So we'll see if that gives us enough pull here to pull up here. We really need to get back, above 73 to get that energy sector to start running again. You got this big old breakdown candle that we got to start climbing, but we're below it right now. So that's more bearish. So we'll see. We could continue consolidating here flat while the energy sector decides what direction it wants to go. Bitcoin, try this weekend. I was on it this weekend. So today, I had a nice little $550 pop. So that was nice. But again, not expecting it to hold at this point. So we still got resistance, but we've been chasing up this candle. Really got to get above 20,000 and hold that for a couple of days, and we're not doing that. You can see that we're still kind of down at the lows here. So we'll see what we happen, but we're expecting consolidation here right now. So we're probably going to kind of bounce and be range bound a little bit here on Bitcoin, which is not unusual for Bitcoin. Ethereum, same thing. We're kind of range bound here, kind of in the middle of this range now. But we got to get above $1,200 if we want to kind of start rallying up in Ethereum. So Ethereum is just kind of following along with Bitcoin, kind of range bound and kind of in the center right now. So that's our stocks, our cryptos, kind of what we're looking for as we open up this shorter week. Again, Tuesday morning, we'll be posting on our Discord, so definitely check that out and join us there. And let's see if we can finish out this shorter week on a positive note in the green. Everybody have a great rest of the weekend here. If you're having a long weekend, or have a great Monday, and we'll talk tomorrow night, see how the trades went, and get our plan for the next day. We'll talk to you later.